All right, Giuseppe. Hey, thanks a lot for doing this. I really appreciate it. And so what we're going to talk about, what I wanted to talk about today, and again, I appreciate your time. I know you're busy, is your approach and your philosophy when it comes to file quality and the quality of the file that you guys put together to turn into operations and your approach to all of this, because there are certainly challenges associated with this business on a regular basis, the pressures that loan officers always get from referral partners to do stuff fast, to issue pre-approvals when they're not ready. I know that you're not unique in that regard, that happens to you as well. So that's what I want to talk about. And I just want you to share your experience, because you've just got an amazing, I know you don't like talking about this. I know that you're not like, oh, I'm the best, but you've always had such a strong dedication to quality. And so that's what I want to talk about, is where that came from and what your philosophies are. And so I appreciate it. I've already sent a list of questions, and so we're talking about those. So why is it, let's start at the top, I think, is why is it, so I know this is how you are, is that you never want to be wrong when it comes to, and I don't mean wrong like I have to be right about everything, but I mean, you never want to be wrong about a commitment that you've made to a customer. Why is that so important to you on a pre-approval or anytime, even on a refinance, when you've told a borrower they're getting a loan?
Well, I mean, I think there's different levels to that, right? So one is just from an empathy point of view. I don't want someone, halfway through the process, their house is under contract to sell. You can't get out of that. And then we're having a problem closing them on their purchase, right? Or I gave them bad advice to begin with, or maybe they shouldn't have even have listed their home if they couldn't get a loan to replace the home. So that's that. I just put myself in their shoes. Two, I think, would be just because I had, unlike I think everyone else at Zenith, before 2010, right, we could process our own loans. So I mean, I had a year where I did $30 million, which was about 100 loans where I processed and closed my own loans, right? So I think like there's some benefits to that. It's really easy. You don't have to transfer knowledge and notes from one person to another to make sure everyone's on the same page. But the flip side to that is I didn't want to create more work for myself once they went under contract, because my primary job was originating loans. Processing was just like, finalizing that process. Right. And so I didn't want to make
I forgot that you did that.
Yeah, I didn't want to make a mistake up front that then I had to deal with mid-process when it was processing, or they were under contract or they were locked or whatever, because that would be a huge time suck away from the originating process, right? Right. We all know when something goes wrong, it takes up your whole day. So then you can't do what you really need to do. And so, those two levels. And then I just think, in general, I read a quote, I don't remember who said it, but, I had it on my board. You pointed that at one point, kind of actually criticizing it, saying it's not that bad, but like, it was just like, it takes years to build a reputation and minutes to destroy it, right? So reputation to me is important at this point. It always was. A good reputation will help create more business, because you'll have situations where a buyer brings their own realtor, and then the realtor Googles you, or maybe they've heard of you, and they're like, "Oh yeah, I know who you are. Everything is great. I'm not gonna like try and push into my lender or anything like that." Or if the realtor's on the listing side, we've had countless situations through the years where our offer gets accepted because maybe we've worked together. Maybe the listing agent, I've done 3 or 4 buyers that bought their listings over the years, and they remember that everything was good. And so you end up getting that offer accepted, even if sometimes it's not the very, very highest offer. And so that of course creates a wow experience for the buyer and the buyer's agent if they're new to working together, because they're like, whoa, we got our offer accepted just because you're the lender. Like, that's pretty cool.
That's really cool. Well, reputation, that's a great point. Reputation.
And then on the negative side, a bad reputation can end a relationship before it even starts, right? Because you're trying to prospect a new agent or something like that. And then, they're having a realtor meeting in their office and someone's like, oh, you don't want to work with him. Let me tell you what happened on this, on this file is a total nightmare. And then, good luck trying to build off of that. Now there's plenty of real estate agents, that even if someone, you make a mistake, something doesn't close or whatever, it's not going to be the end of your business, but it's just going to make it harder. And if that happens over and over, then it's just never, you're always like, you're having a bunch of year ones over and over and over and having to restart, with new realtors over and over and over. And I don't want to do that.
Yeah. Year one, that's that old line. You can be in this business for 10 years, or you can be in this business for 1 year, 10 times.
Yeah.
Right. And so you've definitely gone the other way. So that's a great point. Well, that's all, there's so many, you're right. There's more than one reason why this is so important. It isn't just, so thank you. That was great. So this is, I'm going to start to get a little more technical here. So how do you get, because when self-employed borrowers, it's during COVID right now, and self-employed borrowers, especially ones that make a pretty good living, are a little tough to deal with at times because they're like, I don't even need the money. I could just pay cash. And I'm like, why do you need all this stuff? And yet that's never an issue with you. So how do you manage that? How do you see, because it seems like, and I got some of these questions from our operations team. It seems like everything's always there. It's not like we're always waiting for the P&L or we're always waiting for a bank statement. How are you managing that?
Well, I think it all just starts with a conversation with them at the beginning, right on that first phone call. First, me personally, I won't pre-approve someone without those documents, of course, because most of the time we're sending those to underwriting for a full review up front. Mostly because I want to keep focusing on originating new business, not learning how to underwrite a self-employed borrower. Where you can learn how to underwrite for traditional borrowers and salary borrowers, but self-employed right now with the bank statements and the cash flow. I mean, I've seen some pre-approvals where we had to get 9 months of bank statements. And it's like, I don't even want to know what goes into that. So I tell them we need everything up front, and it's just an honest conversation where, and self-employed borrowers are like, really, when you explain it, all of them pretty much are super responsive and understanding, where they say, obviously COVID's, decimated a lot of small businesses. So I don't want you to hate me at the end of this process. So I want to explain this up front, because if this is going to be a problem, then, I want you to know up front, and maybe you want to call someone else. I don't know. We all have to do the same exact thing. It's just a matter of, are we going to do it up front and make the process once you're under contract stress-free, or are we going to just assume a bunch of things and then ask you for a whole mountain of documents after you're under contract? And so I just tell them, normally in your situation, we would need 2 years of tax returns or 1 year tax returns, whatever it may be. And that's about it, right? Proof that you're still in business. Now, since COVID, I always say the banks, I don't say me, I don't say Zenith, because I don't want them to ever think like, oh, it's harder with us than anyone else. I say all banks are going to require, 2 years of tax returns and a profit and loss. And I empathize with them with the way I explain that. I'm like, it's a lot, right? So, and a profit and loss, and they want to make sure the business is still, earning money. So they want 3 months of bank statements for the business. And, they want a letter how your business adapted to COVID, and everyone's like, oh yeah, that makes sense. That makes sense. And so I'm like, okay, well, good. I just want you to know, we're going to request all that up front. We're going to, we need all that to pre-approve the file, because we don't want any surprises once you go under contract, and just leave it at that.
So that's, I mean, I'm sitting here going like, well, that's just brilliant, Giuseppe. And yet at the same time, it's like, well, all you're doing is setting the right expectation. It isn't brilliant at all. It's just disciplined approach to, I don't want to, and I love what you said earlier, is like, I don't want to stop getting new business to fix the business I already got because I didn't do what I was supposed to do to begin with. And that's all this is, right?
Yeah. I mean, we've done a couple loans this year for, one guy, owned like, I don't know, 72 Papa John company, that, franchises, and, a mountain of documents. But I think if you explain it up front, people that are usually really successful like that, like they get it, and they send it in, and then we get it underwritten, and now we have a couple levels of underwriting. So I just tell them, hey, it's got to go through this process. It's probably going to be like 4 or 5 days from when you get me everything.
So have you had any of those really successful borrowers push back and say, yeah, no, I don't have to go through all of this, just issue me like, and then if you had anybody leave you for it?
No.
Yeah.
No, I mean, maybe if there is pushback, it's just I didn't do a good enough job explaining the situation. But it's like, I sometimes use the analogy of like, if it was, 50 years ago and I was the bank owner and you're putting down that much and that's your credit and I can see all that income on the tax returns, I'm just going to be, an idiot not to loan you the money. But this is the industry right now. And I go in, especially if they're jumbo loans, I tell them, hey, from like March of 2020 until March of 2021, there was one bank that was doing jumbo loans, and their requirements for self-employed borrowers were super strict. And I kind of touch on maybe a couple of those things. Now we have a few more options. It's coming back, but we're certainly far from the days of like, yeah, your credit's great and your down payment's big, so you don't have to give me anything. You're just getting a loan. And so it's important to have that conversation right up front, because if you get one of those borrowers that's like, oh, this is ridiculous, then good, let's find out now and you can just call somebody else. But anybody else, is going to give them the same answer.
Right,
and
it's exactly the same. Yeah.
But I do tell them, like I speak for correspondent lenders, traditional lenders like me. If you go Google hard money lenders, you might find different answers. I don't know that industry. If you call like a First Bank and it's a portfolio bank, they may have higher rates, but they may require less documents. I don't know. I've heard of that. So I give them like that out, right? Like, you want the name of First Bank guy? I'll give you the name of First Bank guy and you can talk to them.
Yeah.
I mean, for someone who owns, 37 rental properties, I would rather that they call First Bank, because they're not going to need a mortgage statement and insurance, taxes, and all that stuff for 37 properties. They don't need that. It's like, just get the loan there. It's okay. It'll be easier. That's the advice I would want if I was in that position.
Right. That's awesome. Well, so this just comes down to a really honest conversation right up front and setting the right expectation. And you're right. When you do that, most people are like, okay, cool, I get it. It's when you don't set the expectation and then you keep going back to them for more documents. We've said this a million times. Everybody hates that. Hey, I'm going to need this. Hey, now I'm going to need this. No one likes that.
No.
Yeah, right on. So let's go to the next one is, once your team and the operations team are involved in the process, how often do you personally communicate or get involved if things aren't going smoothly and if it's not all of a sudden, like how often are you jumping back in?
So, I mean, if it's going smoothly, never, until the CD goes out, and then I have an email that goes out that just says, love to schedule a time to review the numbers with you, or the closing recap, I should say, for a purchase. For a refi, really never, because I have in FlowFi, as those milestone emails go out, I did a video for all of them, and we get great feedback on those. And, I had to do a video once, and it's, it goes out to thousands of people, and I don't have to redo it each time. And I'm sure everyone knows it's canned because I'm wearing a suit. And when it was going out last year in the middle of the shutdown, I'm pretty sure no one was like, he's in the office wearing a suit. I'm like, no, I'm at home wearing pajamas. But it doesn't matter. The feedback is great. The videos, video is a whole different topic, of course. But if it's not going well, then, usually my first hint that something is not going well, unless someone on the team is like, oh, we have a problem, but usually it's like the client starts CCing me on emails, like, hey, I never heard back on this or whatever, or I don't understand why I need this. Then I know, like, okay, they're copying me. I wasn't on the original email that went out. They've decided to add me to this reply, which means they want me to see this, which means I should reply, right? Or else I'm just like not being accommodative to their needs. And
Right.
so then I usually just try and figure out what's going on and, and reply, if it's after hours, I know usually, ops or our team are not going to reply. And so I'll just say, hey, let me look into this right away. Thanks for looping me in. And I'll get you an update tomorrow. And they just, I think they appreciate that. In the rare cases, that there's a lot of communication, if the situation demands it, if something is really like not, because if it's a difficult client or a difficult situation or both, I would, I feel like I have more experience to deal with that than, one of our processors who's been with us for a year, right?
Sure.
And so then just if it demands it, but generally the goal is none, no communication.
Right.
No direct communication. It looks like I am because of the videos, but I'm not really involved in it.
Right. Right. Well, and you're able to do that because the file went in the way it was supposed to go in, right? Like you do all this work up front to get everything, which changes the whole process for everybody. So how many videos have you created to send out to borrowers to answer common questions or explain what you're doing or what's going on?
I think there's probably about 20. So I think I have a campaign that I built that are some of the questions that we always get, right? So what's an escrow account? What's mortgage insurance? How much down payment do I need? What's the difference between conventional and FHA? What are credit scores? Things like that. Those are videos that I did once. We edit them nicely so they look professional. And then I use BombBomb as a campaign. So we have two different campaigns. It's the same videos, but for a normal client who's looking to get pre-approved now, they go out like every 3 days. And then I think there's 12 of those. And then for someone who maybe is telling me it's January and they're like, hey, I'm going to buy in December, then I have another campaign. It's the same videos, but they go out like once a month.
So a different campaign schedule.
Yeah. And so our system is right after the discovery call, I'm letting Haley on our team know, hey, let's add them to the regular campaign or the long-term campaign. And she just plugs in their email. It takes like 10 seconds and then that's going out. And then once they go under contract or they lock in and the operations team sends like the next steps email, they have on my template, they have a link that says, hey, Giuseppe's created these videos to some commonly asked questions. And then there's, I think, 8 of those. And those are like, why is my APR higher than my interest rate? Why is my cash to close? Thank you, CD. Why is my cash to close different than the purchase breakdown? Why is all those things that come up when people get their disclosures and they're like, whoa, what's going on? The seller's title policy, why are my fees higher than what you showed me?
Right.
So they cover those.
And, we had, what was the old saying? If you have to answer the same question twice, you need a template. And obviously that's what videos become a template. People don't really read emails anymore, but videos become the template, and goes back to the thing that we used to say, or that we still say, is I only want the phone to ring for 2 reasons: leads and thank yous. And if a client is calling me, asking me a question, that's where there's a breakdown, because I should have been able to answer the question before they asked. We do this all the time. We know all the answers. We know all the questions and the answers, right? So you've done a great job with that. So that just frees you up for more time for prospecting and business building, rather than answering the phone when the customer calls, right? So it's just about being, really proactive and one timing. That's the old building champions line, one timing everything. Are there additional checklists that you created in your team process prior to pre-approval or prior to turnover?
No brand new checklist, but we take the normal checklist, doc review, and contract in, and then we've added some things to them that are more team specific for how we want notes in Salesforce. For adding someone to like updater to help them with their relocation, stuff like that.
Right. Okay. And then, do you personally review all the income calculations on every loan, or how do you do that? Because as far as I'm concerned, income's the deal, right? Yeah. If the income, because I don't really have any control over anyone's assets, they either have their money or they don't. But income is the deal killer, right? Like income, it either works or it doesn't. So, and to me, it's the most critical part of the approval. How does that work on your team?
Yeah, so I think this goes back to when I started. So when I started and we were at Fairway at that point, and MGIC was underwriting for us, and Marianne Nover, never forget.
Marianne Nover.
Yeah, amazing underwriter, and she, like the deal then was like, yeah, you send it in. So you send it in, just like our reviews now that we have access to our underwriters. You send it in Tuesday afternoon and you get it back Wednesday morning, usually before I, start a business, right? So because I didn't want to be wrong, because I didn't want to go back and fix it later, right? Because I didn't want to deal with that, because I didn't want to ruin a reputation, all that. Because of that, I'm like, well, send it in. Like if I'm unclear on anything, I'm going to send it in. And that's generally how our team is set up now. So personally, the goal is that I never review any income documents. It depends on the experience of the LOA who's working on it. But our process is similar again to what I was doing when I was just by myself, which is, if I'm not 100% sure, then it goes to underwriting for review. Our underwriters don't mind. They encourage it. It makes their job easier later. So anyone can wait until the next morning if we're moving quickly, right? If someone uploads documents today and I have an answer for them tomorrow morning, that's quick. Like that's fast. And so I'm not trying to be any faster than that. Now, there are the rare situations, right? It's a Friday afternoon and someone needs something that you haven't spoken to ever before. Then it's a judgment call on my part, right? If they're salaried, maybe they're on the work number, salary, W-2, I'll probably do a pre-qual letter for them if I don't have their documents yet. If I've asked all the right questions, right? You got to ask all the right questions to eliminate all the potential stuff that can come up. But most of the time, we're not doing that. It's not like that. Everyone's okay waiting a day or two. So I'll review them if our team says they need help. I'll review it. Usually if it comes out of underwriting, I'll take a quick look at the underwriter's notes, but not really get into the actual documents themselves if it's gone to underwriting, because then enough people have looked at it. I'm not going to. So we just kind of train up the team so that they know that that's the first place, if they're not sure, that they should look. And then generally, probably I would say in 6 to 12 months, like I'm not reviewing anything that they're doing as far as income calculations.
Right. Well, it's such a simple approach too, which is like, I don't want to be wrong. And the underwriter, it's a great point. It's like, well, the underwriter gets to say yes or no, right? Because we're going to go by what the underwriter says. We're not going to go by what I say. Well, eventually the underwriter has to give me the blessing, right? And we can't be in the mortgage business without somebody checking the income. So it's a simple approach, right? So I love that. So knowing that you're so diligent up front and you're setting all of these expectations, has there ever been a time where you've lost a deal or a relationship because you definitely would take what most people would call a really cautious approach? I don't see it that way. What I see it is like going, not being cautious. I'm making sure your loan's going to close, but it's definitely a more conservative, I would say, than most loan officers' approach to this. And so have you lost any business because of it? Because that's what everybody's afraid of, right? We're going to lose a deal. We're going to lose a relationship. And has it happened?
I'm sure not anything that I can remember. There's not one instance that I'm like, oh, I really wish I would have just told them yes and then retained that loan. Because I mean, if it did happen, usually, not all the time, but usually it's someone who, right, you're being pressured, right? It's someone who comes late to the game, Friday afternoons, got to make an offer today. By the way, I'm talking to 3 different lenders. It's usually where the relationship with the realtor is brand new. And yes, you want to get that relationship, but not at the risk, like, again, you're going to destroy more relationships than that one if something's wrong, right? If you run into an issue, and the deal can still close, but if it's super bumpy, it's going to get back to the realtor usually. And then that's as good as,
Closing late or not closing.
Exactly. So, or as bad as that. So generally, my skewed view of it is they're usually late to the game. They're pressuring. Usually the buyers are not that friendly. When in situations like that, the realtor and the buyers usually think they're like God's gift to real estate or lenders. When you look up the realtor's number, usually they're not that at all. They don't do a lot of business. And so you just have to kind of weigh all that. But at the end of the day, if there's any gray area, like if they're self-employed, I'm not doing anything until I get all their documents. Like, that's it. Like, why? What am I going to tell the listing agent as soon as they call me after you make the offer? Do you have an application? No. Do you have credit? No. Or maybe. Do you have any documents? No. Has it been through underwriting? No. Like, how is that helping anybody? Right. So
you're not going to get the deal.
Those are the questions the listing agents ask. So unless you're just going to start lying to them too, like, Jacqueline's line, like the buyer's inability to be prepared on time is not my, fire I have to put out tonight.
Right.
So if there has been such, realtors that I've lost their business because of, I've lost realtors' business, but not because I wouldn't do something quickly or issue a pre-approval writing and feel comfortable. Not anyone that I can remember. If there was, it was usually probably someone that I was not sad to see go.
You're okay. Yeah, you're okay to lose.
I never had them. It was just like, I hate picking on Redfin, but I ended up on a Redfin approved lender list or preferred lender list, and those agents are just like, they never have a relationship with their buyer. It's always a different agent. And they're always the Saturday, Sunday call. I'm calling 5 lenders. I need to get pre-approved. And, and it's like, okay, yeah, I'll call you back on Monday for those.
Yeah. Got it. So what are the expectations then that you set with the borrower and the realtor on timelines for pre-approvals?
Yeah, so usually it's all during that initial discovery call. So, I can tell, like I had one last night where it was a past client, salaried, great credit, no debt. There's not anything that's going to show up unusual. And if it's really complex, then I'll, again, just like the self-employed borrowers, we have a client right now who's like, we're just trying on a wing and a prayer to make sure we can't do anything. I don't think we can, but I've been wrong like that many times that we actually can. And so, we need like 5 VOEs for previous employers of the previous 2 years. And so one of them, the employer's sick. So it's like, if this is going on 2 weeks, 3 weeks, but as long as you keep the buyer and the realtor updated, generally the outcome is positive. It's when it delays from the norm, which might be 1 to 2 days, and now you're going longer than that, where it's just really important. And we're training on our team big time on this right now, to just keep people updated. Like, yes, but guess what? We need this one last verification of employment, and this guy's out of the office, and they don't know if he's going to be back for a week and a half. So we're on hold until then.
Right.
That's, as long as they know, it's when they don't start hearing, that's when you get the evening text that you're like, damn it, like, how do I, what's going on with this? And so, yeah, want to avoid those.
Communication, right? Communication is everything. The other one is obviously under promising and over delivering. And when you do the opposite, when you over promise and under deliver, that's what pisses everybody off. That's what gets the realtors mad. That's where the buyer, that's where you get the bad reviews. And obviously you don't get any of those. You get the odd one here and there, but for the most part, 5-star reviews like crazy. And it's just because of you've done a really good job. And now it's just second nature. I don't think you have to give it much thought. And I think, again, for newer producers, especially, is one of the reasons I wanted to do this video, was that just to hear that up front, that, hey, this is how I do it. And having that process makes all the difference in the world. Right. So,
you have to have the confidence that, you're doing the best thing possible for the client, right? And, if they want a pre-qual, they can go on like Lending Tree and get a pre-qual in a few minutes, but it's not going to get their offer accepted. And it's not going to educate the client, right? That those realtors that want the rush pre-approval the same night or the same day, and they've never introduced a client to you before, they're more concerned about getting that check at the end of the day than they are about the buyer, this first-time buyer maybe actually having any idea what they're doing, right? How much are they putting down? What are their options? How are they structuring their mortgage insurance? Are they paying points? Like, that's just not going to happen on a 10-minute rush pre-approval, that conversation.
That's a great point. No, that's a great point. And I go back to what you said at the very front end of this, the empathy. That's really cool to hear, the empathy that you have for the clients, because, I remember when I was a first-time home buyer and nobody told me anything. And I last minute needed an extra $1,000, and I didn't have any idea how any of it worked. No one explained anything. And it was a horrible closing experience. The whole process, they were asking me for updated banks or updated W-2s and pay stubs like a week before closing. I was like, I'm packing. Am I moving? Like, what are we doing here? And so, yeah,
You've asked me for a W-2 a month ago.
Yeah, right.
Like, it's not new.
Shouldn't I have already given this?
You're like, it's May. Like, I've had it for like 4 months. Did you need this earlier?
I'm not in the mortgage business, but I think if you need this, you've needed it all year. Anyway, well, that's, dude, I can't think of it. There's one other question here. At what point in your process do you tell borrowers that all the documents have to be continually updated until contract and even up to closing? So is that just, again, back to here's how this works?
Yeah. So, on the pre-approval, like, we have a standard condition, that's there, that's highlighted, that, we tell them to review the highlighted conditions, but just saying, until you go under contract, keep to avoid, packing things away. Even though everything's online now, that's like, right, been using that same condition for 20 years, but, make sure you keep all your pay stubs and bank statements handy, because we'll have to collect new ones once you go under contract. That's that. And then Salesforce, notifies me at, I think, 90 days after we issue the pre-approval. And then I just send them an email that says it's expired and here's what I need to get it updated. And some people update it right away, some people don't. And, I used to be more diligent about like following up to get them updated. And then I was talking to Chris Hauber and he's like, I never get them updated. And I'm like, yeah, why am I wasting so much time, following up with people to update their pre-approval? Like, they got their email, they got my phone call, they'll reach out when they're ready and we'll get it updated then.
Yeah, unless they're actively out shopping. It's probably, if you knew they were actively out shopping, you like get it.
And it depends on the buyer, right? You have your 620 credit score borrower, like, yeah, we need to pull credit before you, and update this pre-approval, make sure we're still good.
Right.
Not at the other end of the spectrum. Maybe it's not as much of a concern to get it updated.
Right. Well, dude, this is great. You this went a little bit longer than I thought it was going to go. I appreciate it. This has been a great conversation. Do you have any? I know you talk to the new loan officers whenever they have a question. You're very gracious and with the amount of sharing that you're always willing to do. what's your advice for those guys that are just getting going, or maybe not just getting going, but have been going for a while, and they kind of experience that bumpy pre-approval, bumpy closing more often than they'd like? What kind of advice would you have for someone? And then we'll wrap it up.
Yeah, just learn, when you have those bumpy closings, right, there's probably something that could have been addressed earlier. So take notes, like learn from that. Like it's a tragedy not to learn from that, right? Because then it's just probably going to happen again, but you can avoid it. You can change your system a little bit, you can change the verbiage in an email or something like that, or part of your conversation to avoid what likely happened there. And then, bumpy pre-approvals, again, just learn from them. Don't make this, try not to make the same mistake twice. And for realtors that are pushy, that phrase, there's enough people that will do business your way, that you don't have to worry about the ones that don't. And I know that's hard to take in when you're like, well, yeah, it's easy if you're doing 50 loans a month, but it's hard when you're doing one, and I get it. But when they start out really bumpy, they never, ever, 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 ever get better. It gets worse throughout the transaction.
So
So you have to decide how much time you want to invest on that and why you're deciding to bend the rules for this particular client or realtor. Like, is this an amazing realtor that does 100 buy sides a year that you're like, yeah, I'll bend the rules this time to get my foot in the door? Okay, maybe. As long better close, right? You don't want that realtor upset at you. But if it's just some, brand new realtor that just doesn't know any better, why are you deciding to bend the rules for them? Like, is it worth it? Is it worth all that extra time, headaches, and possibly not closing?
I always think what the realtors don't recognize is that a bad transaction on the lending side is a reflection on them too. Like you're going to associate this negative experience with the realtor that helped you buy your house. It is. So I guess a big part of this is how much, one last question that I didn't ask you. How much time have you spent trying to educate your realtors into the correct process for doing this? Or do you invest a lot of time in that?
Probably not as much as I should. I mean, I've been investing a lot of time this year on doing Zoom meetings with realtors to do like the appraisal gap math and stuff like that. And that's really been extremely beneficial, and opened up some doors to some realtors that maybe were closed before. Usually it's just kind of answering their questions and explaining why. I had this very past weekend, we had a really, really complex two self-employed borrowers, married, 2 houses that didn't sell, jumbo business funds being used, divorce, properties in Florida, all kinds of stuff, really complex file. And we sent it in, and then it came back with like 18 prior to second review pre-approval conditions when we thought we were going to have a pre-approval. And so, just had to call the borrower and explain, here's why we need these things. And, the guy is really successful, and luckily he was cool about it. He's like, no problem, got it. And, but I had to have the conversation with the realtor last Saturday because they had, of course, found a house. 3 months after our initial conversation, they had not sent any documents. They sent them in on Friday. We sent it to underwriting, and on Saturday they found their dream house. And they ended up not making an offer on it. So I'm like, I can't do anything. I went back to our policy. I'm like, we're actually not allowed to do a jumbo pre-approval right now until it's been fully underwritten. I can't do it. I can do a pre-qual, but even that, there's too many moving pieces on this one. I wouldn't recommend it. And the realtor trusts me, and she's like, okay, I get it. Are you going to tell them? I'm like, yeah, I'll tell them. and they're fine. And we got all these trailing documents yesterday. Hopefully we'll have it pre-approved by tomorrow, which is Friday, and then go shopping this weekend.
Yeah, you know what? It just doesn't.
Not easy.
It's just not worth. It's just not worth it, right? Like you could have. That would have been a hard one to do. How big is the loan?
I think like 1.2 million. Yeah. But there's just so many moving pieces. Two or three businesses.
Yeah.
That I'm like, it looks good. When I plug everything in after loan beam, my DTI is 20, but sure enough, we sent it in the old days. I would have sent it in, but if I hadn't, all those 18 things that they wanted were things that would have been surprises after he went under contract.
Right.
And like, that's not fun.
No, that's not fun.
Especially when you're like, yeah, we'll do 2-week closing.
Yeah, because you said they were pre-approved, right? When you're the one who says they're pre-approved, that's what they're like, okay, so it's on you now. You said I was pre-approved, right? So yeah, it's not worth it. Well, that's a great story to share. Thank you. Dude, I appreciate it. This time has been really awesome. So many people for a long time. I'm making every new loan officer watch this video. And all the loan officers that are here are going to want to hear it too. I'm sure you're going to get some requests for, hey, can I see those videos? And but again, I know that you've always been really gracious in what you're willing to share. So thank you for that.
Yeah, if you want, before you send it out, I can just attach the link to those videos.
Okay. Oh, that's awesome. Thank you. That's awesome. Thanks. All right.
And then, I mean, anyone can reach out. I know John's the sales manager now, but if you're a new guy, like Jeff Bushlack has reached out to me a few times, this past year, just a few times, text maybe on the weekend. We had a relationship before. He's actually, I did his loan when he bought a house.
Right.
But if you're like stuck and you don't know what to do, maybe we can help, figure out the best conversation for you to have with the realtor and the client.
Thank you. That's really gracious of you, dude. And again, I don't like to say, because you don't like to brag. You're really humble. 600 guy did 605 loans last year. I think you're closing in on 300 so far this year. If you're not there already, you will be, I think, by the end of this month. And, I know you have a team, and it was like, well, he's got a team. He's like, yeah, but it's a pretty small team for that much production. And you talk to every client. So it's not, except for Ryan's, but you do amazing quality work. I really appreciate it. Everybody here appreciates it. And thank you for your time today. I really appreciate it, dude.
Sure. All right. Thanks. See you tomorrow.
Okay.